I'm actually pretty excited right now because we have one of our premier financial advisors at Pure Financial, and that would be Allison Alley.
We have Allison Alley. She's a certified financial planner joining us, and I want to first of all thank you for joining.
Thanks for having me.
And then I don't know if you saw that study, but if you take a look, is that women actually perform better than men when it comes to overall performance in the stock market. Did you know that?
I was slightly aware of that, yes.
So let's talk about that for a minute, because I think when we talked about this a little bit earlier, that activity people think means higher results, right?
Sure.
So the more that you get in and out or trade, and when the markets get a little bit funny, we have to react to them. I'm not saying go blind, but what are some of the things and strategies that you're helping your clients with?
Well, you just have to focus on doing your best to take the emotion out of it, right? And like you mentioned, the women investing and having slightly better results than men. Neither group does particularly well when on their own, but that small difference over time can make a huge impact. It's just being patient and not having those knee-jerk reactions to the daily fluctuations in the market.
But it's very difficult to do that.
Yeah, absolutely.
As you get closer to retirement, as you know, their clients are looking at their investments because that has to create an income for them.
Yep.
Right? I'm 65 years old. I'm going to live for 20 years. I need to create an income, a paycheck, every single month for the next 20 years. What's that, 240 paychecks or something like that?
Right.
So they have to take a look at their assets. And when the markets go down, the only knee-jerk reaction is to get out.
It is. So it comes down to creating a plan, implementing it, and then sticking to it. Like you mentioned, you have to figure out how much income do you need your assets to produce to sustain your lifestyle throughout retirement. Once you've figured that out, then you can determine what type of rate of return you actually need from your portfolio. You don't want to take on more risk than is absolutely necessary.
Yeah, that's easier said than done there too,
sure.
Right? Because I think too is that if people would look at their goals first, right?
Yeah, you have to.
Instead of saying, hey, let me try to get the best return possible, or let me try to find the best investment possible, because there is no best investment.
Right.
The best investment for me might be the worst investment for you.
Completely different for someone else. Yeah, exactly.
I'm sorry, go ahead.
No, I was just going to say, no, you're exactly right. And because there is no perfect investment, that's why you really have to focus on what your goals are. If you only need a certain amount of income, then there's no need to shoot for the stars, because the opposite effect of that is you can see a really large downturn that you just may not be able to afford if you're approaching retirement.
You know, we're talking about behavior when it comes to overall investing, and then that's one of the pitfalls that people make. And another one is when we're talking about emotion, kids get in the way too. The money goes kind of everywhere else but someone's overall retirement. Most people that watch the show are called the sandwich generation, right? They have elderly parents that they might still have to care for, and they might have kids still on the payroll.
Yep.
And so the money's going every which way but their overall retirement. So there's a lot of different factors that people got to take a look at.
A ton of different factors. And keep in mind, you know, we run into clients a lot of the time that they are really focused on wanting to make sure they're taking care of college for kids and things like that, which we definitely understand. But keep in mind, if you're not focused on funding your own retirement, no one else is going to fund it for you.
You can't take a loan for retirement.
Right. You can take a loan for college, right? Your kids can still go to college even if you haven't set aside money for them. But if you haven't set aside money for your retirement, you can't retire. So you just have to kind of put that in perspective.
Well, I guess if the kids go to a really good school, they get really good jobs.
Maybe they can take care of you later.
And then they're going to take care of you later.
I guess that's one plan.
You know, that is a financial plan for some people. Any final thoughts?
No, again, it's just trying to take that emotional aspect out of the whole situation, right? Get a plan, stick to it so that you have the best chance possible of achieving those goals.
Allison, where can people find you if they need your help?
Well, you can always come see me at Pure Financial.
Pure Financial, purefinancial.com.